So today was a really good trading day and some really great examples of how my breakout strategy works. I just did a video on breaking exactly this down of how I use this, how I set up my chart, all that. So if you haven't seen that yet, go check that video out. I'll put it right here up top here that you can click so that way you can understand what I'm talking about. But I do want to go over just a couple very small tweaks that I forgot to mention in that video. But I also just want to show today's trading day of exactly how this worked again, just because I don't want you all to think I'm just dropping these videos just to like show you cherry pick trades. Like, no, these are live trades I'm taking and you can see exactly the wins and the losses. So without further ado, let's get into the chart and get into the video right now. Okay, and like I said, if you have not seen this video, this one right here, I just uploaded it a day ago. It got a lot of really good attention. I have had a lot of DMs about it. I'm going to answer in this video as well. And if you haven't seen this video, I literally just dropped 20 hours ago. I'm telling you, trading is so much more than just a strategy. It's so much more than just knowing where to put entries on a chart, because it's about your psychology, it's about your mental mind, it's about your mental health, and you need to master your mind if you want to become a profitable trader. This video helps you. It's literally just a 5-minute long video. It's 5 minutes of an investment into your time. I'm telling you, please go watch that. It will help you a lot. But please, if you haven't seen this, make sure you watch this video to just get the overall foundation before what we're talking about here. But here we go. Let's get into the video of exactly what we took trades on today. So I'm going to start with the NASDAQ. So this is on the 5-minute time frame for NAS 100, and all we were looking for was a breakout of this previous London low here, and it formed a newer high at the start of this candle here, and which is what we took. Now I want to make sure I just get a little bit of some tweaks out of the way from that previous strategy video, because I want to make sure people understand exactly how to use this. So the first rule, like we talked about, is we need to obviously make sure we go to higher time frames. We need to make sure we know where major key levels are from past history. So we knew that right here, price was making, new highs for this year, because if we look back, because a lot of people are like, why is price doing what it's doing? Well, if you just find context of price, why is price where it is, you're going to be so much better as a trader. So if we turn off sessions here so it doesn't look crazy, all we do is just trail. You see how price makes this little dotted line? All we got to do is just trail that line and see where it was hitting before. So if we click replay mode, if we go back to when market was about to open, so here's 9 o'clock, and then let's go to the 30-minute time frame just to get right where market opened at. So let's just go here right at 9:30. So 9:30, here's that big candle that formed. So all we do is we take this dotted line and we're just going to trail it back to where in the world has price been around this dotted line in the past. And we see, boom, right here, we see exactly, let me turn off my SAR so you can see it just a little better. We see exactly where it was at. So it broke this major resistance area right here. Okay, there's pretty much no friction other than right here and right here. We see that there was a really good resistance area that it was respecting for quite some time right before market open. It kept bumping off this area, then boom, right at market open, it closed right above here. So I felt very confident, okay, it broke past that high. We're going to get some really good trades this morning. So all I did was draw a couple key levels above that, because like I said in my recent video, all I'm doing is drawing those major order blocks, key levels of recent price action. And this was that recent price action. These are the next levels, barriers, whatever you want to call it, of where price would go. So now we go all the way back. Now that we know where context is, we got our lines. We were then on the 5-minute chart and we just drew and we took our trade. So obviously it's a little fast forwarded because I was on the 30-minute time frame. So all I did was I took a long here right when it broke that high and we got into that trade. Now you'd be asking yourself, well, Austin, why didn't you take this trade here? Because in the strategy, after I formed context, one of the rules was, well, when price breaks the McGinley, which is this line here, with the moving average and the McGinley moving to the upside, which we see here, we see this is the whole moving average going up. We see the McGinley going up. Why didn't you take the trade here? Because if you look, it was at 8:40 a.m. Eastern Standard Time. One of the main crucial rules in that, I even warned people in the video, this is one of the crucial things you have to do, is you have to have discipline and patience when you use this strategy. Okay, so when I was looking at the market, was I up and behind the chart? Yes. But one of my rules that I am very critical on not breaking is I want to wait for market open, which was right here. If we draw a dotted line here, this is when market opened, 9:30 a.m. Eastern Standard Time. I was very, just sticking to my rules. I'm not taking a trade. Could I have made a little bit of money? Sure. But statistically, if I take a trade before market open, it's going to go crazy, not in my direction. It's just uncertain. I want to have as many certainty things as possible that I know is going to work for me, and this is what works for me. So while there was a little bit more room for profit, it didn't fit my rules, and that's perfectly fine. So now that it wasn't after market open, I just had to wait for a break to the upside, because it's an either or scenario. Either I'm looking after 9:30 a.m. Eastern Standard Time for a price to break and close above or below the McGinley in the hole, or I'm looking, if it already has done that before the market, I'm looking for a break to the upside of recent highs or a break to the downside of recent lows for a short. And that's exactly what I was looking for. Since it already, broke the McGinley, well, I'm not going to be waiting for it to, break a McGinley to the upside. I'm just going to be waiting for it to break the upside. Or if it comes down here and then breaks all of these, then I'll be looking at a short without waiting all the way for it to break the downside. Does that make sense? I hope that makes sense. So that's one thing I didn't include in that video. And the other thing I didn't include in that video is the 200 exponential moving average. I like to include that again to not trade against the trend, to go with the trend. So I like to keep this because it avoids some of the false signals. So let's just say this happened at 9:30 or after 9:30. Let's say we got in here. I only take longs if all of these criteria are met above the 200 moving average. Okay, so I don't take trades like if the 200 moving average was, say, moving up here, but it broke the McGinley, I would not take this long because it's still below, the price is still below the 200 moving average. I wouldn't take that trade. I'd be trading against the trend because the price is below the moving average, it's bearish, so we're not going to do that. So I only wait to take these trades until the moving average is above all of my other criteria. So I didn't include that in the last video. I literally just forgot because I was building a whole new chart, so I do apologize for that. But that's the only thing, is because sometimes you will get some false signals. If we just look real quick, we can see a false signal here happen. Now again, I don't trade this late at night, but we see here that the price broke the McGinley, broke below the VWAP, all that stuff, right? Whole moving average was moving in the downside, but you see how it broke the McGinley, but it was still above the 200-day moving average, which is this one right here. So I wouldn't take that trade if this was, in my trading window, because see, look at that. It still was in a bullish direction. It was still bullish. So I wouldn't be trading against the trend, and that's how you can avoid some of those false signals. So you don't have to have those, stupid losses that hit your stop loss, and you have really good solid entries. All right, so now that we got all of that out of the way, where you kind of have the updated rules and the updated strategy, we took the trade here and we just literally rode it all the way until it hit my full take profit of 125. Now, you would be asking again, because in that video I talked about how I use this SAR to kind of trail my stop loss, and I do, but when volume is this heavy, and again, I have the context that if it breaks here, the next logical point for NAS to go is right here at this key level of that recent high. I'm just going to sit here. I'm going to be happy with my 125. I don't get greedy. Some people would argue, hey, let your winners run and all that. But for me, man, this is just what works for me. And I just want you all to understand this is not the way of trading. This isn't the only way. You can make this strategy work with however you like to trade. So in this case, where volume was so heavy on my side, when it was just pumping like this, I was happy with this 125. Could I have, use these yellows? And that's what a lot of people do as well. I had a lot of great reactions from that video where they did find success today, using this, and that's totally fine. Look at this. You could have, used the yellow to trail your stop loss into profit. And let's see, what would you have done? So it would have hit that yellow dot right here. So this is where your stop loss would have gotten hit in profit. So you could have gotten extra. So you got 173 pips. So that's not bad. That's still a great way to trade and a great way to use this. I just was happy with 125 today. So that's what it was. So this is trade number one that we took with NAS. If we open up over here, we'll see this was the Dow Jones. Again, 5-minute time frame. Again, I did my top-down analysis, higher time frames, found my key levels, which was these two lines here. So I knew that price was going to come around in this direction. So right at market open here, it formed a higher high. So I was just waiting for that to be broken, because it did break the McGinley. Everything was moving to the upside. I just, obviously, like I said, didn't get into this trade because it was before market open. It was against one of my rules. So I took a long here, boom, hit my 125 pip take profit, honestly, right on the top of that wick almost. Came back down a little bit, and again, this is where it's just either or. Do you want to use the yellow to trail your stop loss, or is volume so much in your favor today? Do you feel confident in just hitting that full take profit? I felt confident hitting that full take profit because if I were to, in this scenario, use the yellows to do my stop loss again, you see this wick here, but this yellow formed after that wick. That's why this wouldn't have been hit. So we just trail that up, trail that up, trail that up, and it would have gotten hit right here. So I could have, squeezed a little bit more pips out, got a 150. Again, this is a total personal preference. You never want to look back in your trades and be like, oh my God, I could have made so much more money. You're happy, you won. So this was win number 2, and then the last one we took was gold. So let's go over here to gold. This was my gold trade for today. Now, this one was a tad bit different, but you did see here, honestly, I took the trade right when it broke because everything else was in confluence. It was a bearish downtrend. We had this huge bleed. It was coming back up to retest here, and I just felt very confident it was going to retest off this low, come back down. We had a bearish whole moving average. The whole moving average was pointing down. McGinley was going down. The 200-day EMA was going down. And we seen it close below all of that. We closed below the 200 EMA and the McGinley, so I was happy going into this short. So I went into that short, caught this entire down move, and in this case, this is an interesting example where I was just looking at this previous high here in conjunction with the VWAP, which is this one right here. We talked about it on the last video. So I was just honestly just aiming for the VWAP as my take profit, and that's exactly what happened. Now again, you could have used this strategy. I could have used the yellow to trail my stop loss, and if I would have done that, I could have squeezed out just a tad more profit right there. But again, happy with this day, happy with these trades. So I just want to show you all some, again, more live examples of using this breakout strategy, and it is insanely powerful to use and add to your tool belt. So I did a little screen grab of the backtesting results, and this is exactly what I did. Now, I think, don't quote me on this, I think I started with $1,000 using, again, I don't know what the exact starting capital it is with the replay function. If anybody knows, just drop it in the replies below. But either way, I came out extremely profitable. I started at 0 and then made $557.60. I wish it gave me the percentage of like how much based on my starting capital did I win. So I don't know the ROI for that. I'm sorry, because that is way more important than a dollar value. But look at this. With a 30% win rate. So that's what I want you all to understand is even though this won 30% of the trades meeting my criteria, I was still able to come out extremely profitable. One of those profitable trades, right? $109. Like, this is the data you need to understand is you can still be insanely profitable even with a 30% win rate. Okay, so this strategy works. This strategy has got me funded. And to pass these funded challenges, you have to have very strict criteria. You have to make sure that you're still following that drawdown, that very tight drawdown versus trading personal money. So if this can pass a funded account, this can make you either a funded trader as well, or if you just want to trade your own money. This strategy works. You just have to be disciplined and be very deadly consistent on using this, because here is a great example of what I want to show you is, say you were trading NAS, and again, it's a 30% win rate. So say you kept losing here, right? You lost here, hit stop loss, but see how low the stop loss is? You're only losing 25 pips every single time you lose, but you're gaining 100 at max, right? You're gaining 125, and then if you trail, you can gain even more. So you make back all of those losses and then some. You can lose 3, 4, 5 times in a row, win one trade, and literally kill it. Not just make up all the losses, but make net profit. So that's what I want you all to understand is if you're taking losses using this, please understand that you're going to do that. Every strategy has losses, but you have to be consistent. What makes a lot of people not profitable and are not consistent at trading is they'll try a strategy. They'll do what's called strategy hopping. They'll try a strategy for a few days. Maybe they'll take losses or whatever. And as soon as they take like 2 to 3 losses back to back, they'll go to another strategy. And then they'll take a few losses here. But as they're taking a few losses in that strategy, the other setups in the other strategy they were using were actually finding profitable setups, but they didn't use that because they were hopping around. So don't do that. Don't go around hopping. Like, even if you hate this strategy, you could not use this, whatever. Find a strategy that works for you and then just be consistent for a few months. Okay, because if somebody is teaching a strategy that has actual results and is showing you live results and how good it is, and you're finding some profitable foundations through back testing, a little bit of forward testing, it probably is going to work. There's a million ways to make money out there being profitable. It's the fact that you need to understand you're going to take losses, but you need to be consistent at taking the trades. So there's the video, guys. If you did enjoy this, I'm going to do another strategy video of the other type of way I trade. It's called mean reversion, where I trade reversals. If you want to get into that video, if you want to see that video, I got like 25 likes on my other strategy video, so let's get 25 likes. If this video gets 25 likes, I'll do a part 2 for my other strategy video, so just drop a like if you did find this helpful. Hit that subscribe button and click that notification bell because I go live every Monday publicly. You can watch this totally free. You don't have to do anything. And then privately Tuesday on my private live stream. Link is in the description below. I love you guys. Thank you so much for watching. As always, stay grinding on your goals and never let anyone tell you that you can't do something they have never done themselves. And I will see you later.